All right. Better late than never. Back in the action here once again. Time to get back to work here tonight. Thursday evening. It's May the 14th, 2020. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me tonight because my job tonight is to help us find the best entry setups for tomorrow. That's Friday's trading session. And I got a jam-packed video in store for you tonight. As you can see, the charts are all prepped up in the background. All the charts are ready. Got some oil, some S&P, and some gold. Got a lot to talk about tonight on the video. Got some big breakouts running higher. We talked about buying the dip in last night's newsletter. Some of these breakouts, you want to trade them. Others, you want to fade them. We'll talk about that in great deal tonight on the video. Before we jump in, though, and break all the plan down for tomorrow, though, I just want to remind you guys, make sure you subscribe to this YouTube channel. I don't want you to miss all the good stuff we publish every evening on this video. So subscribe to the channel. That way you don't miss a beat here on the YouTube channel. And don't forget, if you have any questions, drop those questions in the comments section below. And as always, guys and gals, I always appreciate you tuning in every evening. If you watch every evening, if you rely on this video to get your mind right and your charts right for tomorrow, hit that thumbs up button for me. Thank you so much for supporting this YouTube channel. So subscribe, drop those questions in, hit that thumbs up button. But enough of the introduction. Let's get this party rolling. Let's get the video tonight started with the calendar for tomorrow. Tomorrow is a Friday trading session. Finally Friday tomorrow. Last big Friday of the month, I believe. Next Friday, of course, is that Memorial Day holiday weekend. I'll talk about that next week. Next week will be a relatively short week. We'll talk about that next week, though. But tomorrow really might be kind of the last Friday of the month, right? I know there is next Friday, but of course, next Friday is that Memorial Day holiday weekend. But I'm getting ahead of myself. I'm daydreaming to Memorial Day weekend here. Let's focus on tomorrow's trading session. Tomorrow, of course, it's Friday the 15th. We know it's the end of the week. Friday sessions. First of all, what does a Friday always tell me? Fridays are always kind of a variable. They're always a question mark. You know, sometimes Fridays are rip-roaring, great volatility, great action, but sometimes Fridays can be kind of a dud, right? Sometimes they can be slow and sluggish. So it's, you know, I'm a perma-optimist. I'm always an optimist, so I believe in coming out every morning and giving it your best shot. You do your best work, you'll get good results in the long run. But you know, Fridays are always, they're difficult to pin down, right? Sometimes they're great, sometimes they're kind of sluggish and kind of slow. So we won't know that, of course, until we get into the markets tomorrow morning. But the one thing we do know about a Friday is it's early in, early out. You know, we usually get together in our trade room every morning, and we usually trade every day from about 8 o'clock Eastern time till about 11:30 a.m., right? Give or take a little bit at the end of that session. On a Friday morning, though, you've really got to be having a good reason. You really got to have a good reason to be trading after 11 a.m. And what I always do on a Friday is I always start really paying close attention to the clock after 10:30, after 10:45 a.m. on a Friday morning. You know, hopefully I'm wrong about this, but usually after about 10:35, 10:40, 10:45, things start to get a little bit sluggish. People start to unwind their positions, and we start going into the weekend, right? So just be aware of that. You know, again, usually it's going to be a little bit earlier of a morning session close on a Friday. Now, don't get me wrong. You will see movement in the afternoon on a Friday, but just beware, though. As we get closer to the closing bell on Friday, traders tend to take bigger risks. What happens is, as you go into the afternoon session on a Friday, you have this really dangerous cocktail of lower volume and higher levels of risk taking. You know, what happens is as you go into the end of the week, traders who are down on the week get desperate to take trades. And of course, traders who are way up on the week, they get all loosey-goosey with their rules. So we tend to see more risk tolerance as we go into a Friday afternoon, most of the time because of desperation. People trying to make themselves back some losses they had earlier that day. And if you've been a rookie before, like I have, I distinctly remember that feeling of desperation on a Friday. So I would, my best advice to you and my clients every day is on a Friday afternoon, stay the heck out of the market. There's all that it reeks of desperation. Combine that with the lower volume, and you get a really nasty cocktail of price action. I focus on those first couple hours every morning on a Friday morning, especially, and tomorrow We've got some pretty big news tomorrow to hopefully get these markets moving here for us. First of all, I got the retail sales number, of course, at 8:30 Eastern Time. That is the big news in the morning tomorrow. That news report at 8:30, those retail sales numbers. I'm sure everybody will be tuning in here to see how the big names perform on the retail sales. That's the big news of the morning. Later on in the morning, of course, we got the industrial production number at 9:15. That'll be a great one as well. Probably won't be as big of a catalyst as the 8:30 retail sales. And then later on in the morning, we got that JOLTS report at 10 o'clock Eastern Time, which is always well known as being, it's usually kind of a sleeper as far as a news report. At first glance, it doesn't look like a big deal, but it does tend to have some impact on these markets. And remember, that block around 10 o'clock lately, we saw it today, we've seen it all week this week. I've been telling you guys, right? Keep your eyes open. That 10 o'clock to 10:45 window there, that will be a great way to finish up the session in the trade room here tomorrow morning. So we get a bunch of news tomorrow. Again, 8:30, 9:15, and 10 o'clock. We get some big news early. I would definitely focus, though, if you could only be at your desk for an hour tomorrow, that 9:30 to 10:30 block is definitely something I would try to be at your desk tomorrow, because we've seen a lot of those great setups around 10 o'clock, 10:15, 10:30 over the past couple days here. Now, again, right, you want to play it close to the vest on that tomorrow. As we get closer to 11 o'clock, be careful. But that 10 o'clock to 10:30, 10:45 window, probably going to be where we get the best setups if it continues the way we've seen here so far this week. Now, don't forget, there's a lot going on here in the world we live in right now, right? We got, of course, everyone waiting on more information about the second wave of this coronavirus, right? They're reopening all the economies around the world right now. We're watching and waiting to hear more about that, right? The tensions to the U.S. and China. We've been tracking this for a long time here, a couple of weeks now. We continue to watch those increased tensions between the U.S. and China. Will we see some more headlines on that? And, of course, stimulus, right? More and more information coming out every day right now on the next round of free money, right? Easy money, liquidity, whatever they want to call it, stimulus, right? We're watching those headlines here right now. So early in, early out tomorrow, retail sales early. Stick around towards the end of the morning session for that 10 o'clock shock we've been seeing lately. Will we hear more about the second wave of the virus, right? Will we hear more from U.S. and China tensions, and will they hit us with an update on the stimulus package? Those are some of the important details we're watching tomorrow morning. At this point, all we know is we'll come out tomorrow, do our best. Don't forget, we'll be trading this strategy tomorrow morning in our trade room, 8 o'clock Eastern Time, like we always do. I'd love to have you there with me. You can prep all the charts tonight and come trade with me tomorrow. You got to be a member, though, to join the trade room tomorrow morning, and I'll put all the membership information for you down in the description of this YouTube video. So grab that link, get registered for tomorrow morning's trading session. All right, let's jump into the charts here tonight. We got the calendar all ready here for us. That looks good. Let's grab some charts. We get some oil. We got some S&P, and of course, we got some gold here for us on the radar tonight. I'm going to start first, though, on the oil here, the black gold, the Texas tea. And what do we know about oil here right now? What we know is the market is bullish. We got a nice, strong bull run higher, nice 1, 2, 3 breakout of that trading range. And that's a big part of what we're seeing on the chart right now. The first thing is we know we're bullish. There's no doubt about that. The most important clue, though, is where we came from. And that is we came from that range. And we're going to talk about this comparing the oil and the S&P tonight, because the oil and the S&P at first glance, they look very similar, but there's some very big differences between the oil and the S&P, and I want you to see that, because this is a market you can trade on the S&P. This is a market you almost want to fade, right? On the S&P, you're going to want to trade it. We'll talk more about those details as we go. Most important thing right now, though, is strong move up. Got that breakout of the range. We came from a trading range And we are now right up at a major high here at this 27.98, 27.99. We'll call it 28 even, right up around these highs. My biggest concern about the oil right now is it's not direction. We know we are bullish, right? Here's the problem though. We came from a trading range, right? We came from a trading range. We could easily find ourselves right back down into that range if these buyers can't hold. Now, why would I say the buyers can't hold? Because even though it's a pretty strong move higher, it kind of leaves a little bit it leaves you desiring more right now, because all they got was a measured move. That's really all they got here. They got their measured move. That's expected on a breakout, and they're sitting right at these highs. So even though I know we're bullish and I want to be a buyer at support in a market like this, it leaves me thinking, boy, if these buyers don't hold this thing, we might find ourselves right back down to that 2604 here for tomorrow. So I love the bullishness. I love the strength to it, but it leaves me thinking, I don't think they did enough today to really knock out those bears right now. And so when I look at the chart, I've got some opportunities to be a buyer right now. I got some great levels of support, as you can see here, marked up. I've got my new channel I can see here, right? I've got my prior swing highs. I really like that area around 2711, 2696 area. So I do want to be a buyer on this, but I don't want to be too aggressive on this. That's the big thing, and you'll see why on the S&P when I go to the S&P chart here a little bit later on in this video. So what do we know about the market? We know we're bullish. We want to buy off support. I've got this really nice looking channel here. Okay, the only problem is that when I get a pullback to low of that channel right now, what's going to happen? We're still right into that level of resistance. That's the problem. That's what I mean by they did a good job with this, but they got to get it going further. If this would have gone through that high, for example, up inside my momentum zone up top here, if this would have gone up into that area here, this would be a completely different ball game. It'd be very difficult to justify being a seller on this thing. But in this example right now, like I said, the buyers they're kind of walking on eggshells, in my opinion. Now, there's really a couple scenarios you want to keep in mind. Do we get a shallow pullback? Do we get a deep pullback? Do we see a range up here? Because after all, you're right at that level of resistance. Or do we push through these highs? Okay, those are really the scenarios you want to make sure you're all prepared for here for tomorrow morning. For example, if we see a shallow pullback, right, that'll low this channel, what's going to happen is we're going to be just underneath that moving average, and if I wasn't worried about this brick wall of resistance up there, if I wasn't worried about that resistance, what I would do is I would look for a seller failure off the moving average, right, and buy into stop losses. It'll look like this, right, where they go up, they pull back, the bears try and fail, and the market runs higher. I'd be looking for that pattern. But here's the problem, though. We're not there yet, right? We're right at that major level of resistance. So you probably know this if you watch every evening on the video, right? But what's the best way for me to avoid buying into resistance? I need to use a trap pattern. And sort of look for here is as we go, right, as we pull back, shallow pullback, it's one try, it's two try, and it's a trap low. This is going to be the only way I can confidently, remember, confidence and reliability is key. This is the only way I can confidently buy this shallow pullback. And there's no problem with buying it. It's just I gotta protect myself. It's a very strong move higher. I just don't want to buy right into that level of resistance, right? So shallow pullback with a trap entry, that helps me buy off support, but just absorb a little bit of that issue with that overhead resistance. Now, if I can get a deeper pullback here now into what I'm really hoping we do get tomorrow, now I've got much easier now, right? Now, because as this market goes lower, I can look for sellers trying to get short off the moving average. And once they do, now I know exactly where their stops are, and I can buy right into those stop losses for a seller failure pattern. In fact, if we get really lucky on this, what I can do is I can grab this thing, right? I can grab the seller failure, and then hit it again on that bullish pullback, right? So sellers try to sell the pullback. And again, I mean, I'm not making these patterns up. You can see them right here. There's one, there's two, right? These happen all the time, right? We go up, we pull back, seller failure into bullish pullback, right? So it's that pattern, right? That pattern is what I'm referencing here, right? That'd be if we get a deeper pullback, right? Inside of that battle zone. So shallow pullback traps, deeper pullback, looking for a seller failure pattern, right? In a bullish pullback from there. Now, we may also, because we're sitting at this, again, this major top up here, and we're at a measured move, tomorrow's a Friday, there's a good chance we may go sideways, right? And so we may see the market go sideways here. Now, if we go sideways at this point now, the first thing we'll look for is if we can get any support levels, right? So if we start going sideways here overnight, I'm going to start looking for, right, a support trend line down underneath that range. Then I'm going to combine that trend line along with a seller failure below that low. Okay, the most important thing is if we start going sideways in a range, right? If we start going sideways here, let me zoom in a little bit more here, right? If we start going sideways here, once I start seeing us go sideways, that's when I start looking for additional levels of support, right? So I'll go back, I'll look at that swing, right? I'll look for a trend line down here, you know what I mean? I'll look for some support levels down here. Now that's where you want to be buying. But you don't want to try to pick the bottom on it. You want to wait for the pull back, wait for those bears now to come in and try to get short, right? And then look to buy into those stop losses. It's a very simple pattern, but you want to apply it under the range around another level of support. That's always going to give you a much better result rather than just simply buying in the middle of nowhere. All right, so if it goes sideways, it's a failure pattern, it's a seller failure pattern, but off of, right, some key levels of support. Now, there's also a chance too that we keep running up to that momentum zone. So if we keep running higher here, let's say for example the market keeps running higher here right now, I'm going to leave that trend line right there. Right, I'll leave that channel right there. And so if we keep on pushing higher, you can almost kind of see this ahead of time, right? Now this level of resistance I was worried about, now this becomes a great level of support. So think about how now if we keep going higher, that resistance that I'm worried about now becomes support. Now we pull back below that channel. There's my seller failure. There's my bullish pullback from there, right? So we take that deep pullback and we bring it up above that high. So if we do keep on, right, if we do keep on grinding higher here, I'm still just waiting for that pullback off of that high. All right, so now we know kind of more about my plan if the market goes up, if it pulls back, and if it goes sideways. We've talked about traps, we've talked about failure patterns, right? And we've talked about obviously finding the right levels of support and resistance. Now, don't forget tomorrow morning, we're going to do this all together tomorrow. If you're not with me tomorrow in the trade room though, the next best thing is to grab the free trading course. I'll put a link for you guys to make it easy in the upper right hand corner here. Grab that link in the upper right hand corner for our free trading classes. Learn my favorite setups, learn my favorite strategy. I'll send you hundreds of examples of how we apply that strategy to our favorite futures markets. If you're brand new here or if you're new to trading overall, definitely got to make sure you grab that free course. I wish somebody would have given me that knowledge I give away for free in that free course. I wish I would have learned that when I was rookie as well. So grab the free trading course. And again, like I mentioned earlier, I'll put all the important info for you guys down in the description of this YouTube video. That way you can click on that link to get registered for tomorrow morning's trade room or to grab that free trading course. So now we're looking pretty good here for the buy side. Now, what can I do to the sell side? Okay, and this is a very important part of this puzzle. Remember, the day began coming out of that range. Right? We got that beautiful little, well, didn't get a trap, right? Little double bottom there off that low, and that just ripped 1, 2, 3. Remember though, that range hasn't disappeared, and that range is a magnet. Okay, this is a big difference between the oil and the S&P, so make sure you pay attention on this. On this move higher here, can I sell this market right now? Well, am I at a major turning point? Yes, I am. I'm at a major top up here. So can I sell this market? I definitely can. I've got that range waiting down below. That's the magnet. I'm at a major turning point. Now, how can I sell this market safely? I can look for a crown reversal pattern. I can wait for the buyers to try once. I can wait for them to try twice. And I can look for traps off of that high. We call these crown reversals. Now watch how this pattern looks, right? Watch how this pattern looks. It sets up with two lower lows here, right? And it goes lower, right? Lower high and then higher high. Right? So it's a very specific pattern here. And basically all you're doing is you're letting the buyers try once, letting the buyers try twice, crown reversal to sell back down. In a market like this, you can try to pick those tops because the day began in a range. That's the magnet back at 26, and we're at a major turning point. On the S&P though, don't you dare do that on the S&P. And we'll talk about that here in a second. What is a much more reliable pattern, I want to make sure this is very clear. Remember, counter trend reversals, these are the lowest on the totem pole. These are the least reliable out of all the setups I've described so far because they're going against the trend. So you're not trading a full size position, you're going a quarter size, you're going one contract, right? And again, as I always mention, if you're a relatively new trader, these types of reversals are really off limits for you because they're not going to give you those really high winning percentages that are so critical for a new trader. When you're a new trader, forget about the money. It's not about the money. It's about getting confidence in yourself, in your emotions, in your discipline, and your strategy. The money comes after you build the strategy and the confidence. These types of patterns, they're only going to have a 65-70% winning ratio because by definition, they're reversals. And new traders, stay away from these. What you want to look for, if you're a new trader out there, is the reversal pattern. Now, what's a reversal look like? A 1 strong move down, 2 is a pullback to the moving average, and 3 is that jump off the moving average. Now, once I have that 1, 2, 3 reversal, now I can mark up that low, I can mark up that high, and I can start looking for a short off of that high. Right? So very, very important to remember, if you're on a one contract account right now, a small trade account, don't try picking those tops. Wait patiently for that 1, 2, 3 reversal. Then you can get aggressive. Then you can trade with confidence. And I'll tell you, after a couple weeks of staying disciplined to take the most reliable setups, you'll have the confidence and your account size will have grown as well. And then you'll be able to be more flexible with calling tops in a bull market, right? So keep that in mind as we're going into tomorrow. And remember, early in, early out on a Friday, right? We're not trying to grab these things in the afternoon on Friday afternoon. All right, looking good here on the oil. Oil's got the plan all put together here for tomorrow. We know the buy side, we know the sell side. How about some S&P? Now, the S&P is a great example here of a market that you do not want to try to fade, and that is because of where we are. Boy, who could have ever seen this thing going all the way back to that range magnet? I have no idea, right? Somebody must have picked up on that yesterday. I'm joking with you, obviously. We talked all about this yesterday, right? We talked about last night how probably the best trade would probably be that bounce late in the morning, 10 o'clock. Boy, we had this nailed to the wall. We talked about this last night. So really, really well done last night. And it had you ready for this whole move. We talked about it last night, came into fruition today. I'll tell you, this is where a lot of hard work comes in. That's where you build confidence, right? You build confidence by putting the plan together, executing the plan correctly, and being rewarded because of it. All right, what do we know about the S&P right now? It's a bull market, but we're 3 legs higher, right? 1, 2, and 3 legs. Now, you may not be aware of this, but when a market goes 3 legs in one direction, we almost always see a trading range, right? Ranges are very, very common after a 3-legged move. There's potential we might see a 4-legged move, right? But that would be quite a feat before we go sideways here. So the big thing we have though right now is look where we are. We're right back to that range again. Now remember, what is a range? A range is a magnet. So now you can see why I said the S&P and the oil look very similar, but they're very different. Because on the oil, the magnet was back down to the lows, right? On the S&P, the magnet is, well, right where they are. And we talked about this magnet last night on the newsletter, and we're not surprised that we're back here at this 28.56 area. This is a market that you've really got to be careful, right, to be a seller, because you're not at a turning point. You're at a magnet right now, right? Oil was at a turning point with a magnet below us. We're not at a turning point right now on this S&P. I'm going to be very careful about being a seller on this market, unless, of course, we get a full 1, 2, 3 reversal. So we know we are bullish. I want to find levels of support to be a buyer off of. We also see we're very strong, and we haven't finished off that last measured move yet. So there's still room for this market to go higher here. And you know, that really reminds me of some scenarios I want to be ready for here tomorrow, right? For all I know, this market could easily keep going here in the overnight, and I want to make sure I'm ready with a plan on that. I also want to be aware, right? You know, anytime we see a market go 3 legs like this, I want to be ready for a possible trading range. So we'll definitely make sure we talk about that here tonight, right? You can see that range there I've got kind of marked up there. So range is possible. And then obviously a pullback, right? I got some support levels here, support level there, got trend line there. This area here would be a great spot right now for a pullback. So I want to be ready on that as well, right? So we'll talk about those scenarios as well. I don't want to try to call the top on this because unlike oil, there's a magnet waiting up overhead, right? So very, very, very small difference, but very big, big difference, right? If you know how important those ranges are to price action trading. So first of all, what if we push higher here? You know, I think that's the biggest that's the biggest thing right now. If the market continues to push higher, if we keep going higher here, because again, we haven't reached the measured move yet, we haven't got to that 20.56 yet. If the market keeps running higher here, what do we do at that point? Well, at this point now, if the market keeps running higher, I'm going to grab a new channel here and update that channel. Okay, so just be aware of this. If the market keeps running higher here, I'm going to take this. If I get this thing out of here real quick to kind of simplify it, right? Let's get that out of there. If we keep on running higher here, right? Let's say it just jumps up like this. I'm going to grab this trend line. I'm going to mark it up there. I'm going to mark it up the low. I'm going to look for that buy, right, off of the low of that new channel. So if it does, right, if it does start to run, I'll look for that new updated channel. I'll wait for the pullback. And I know it's kind of tough with the candlesticks underneath this, right? But I'll wait to get the low of the channel. I'll look for that seller failure pattern into a bullish pullback, and we'll keep the party going. At this point, that momentum is so strong right now. If it keeps on going higher, buyers will buy these pullbacks with seller failure patterns, right, and bullish pullback patterns, right? And again, you can see what a failure looks like back here, right? Strong move up, they pull back below the moving average. Bears try to sell it. We know where stops are, and we can buy into those stops, right? Next pullback, that is a great example of a seller failure into a bullish pullback. So we keep on running higher here. I don't chase after it. I mark up that new channel. I wait for the deep pullback, get underneath the moving average, seller failure into bullish pullback as we go. Now, there's also a chance too, if this market really spikes going higher here, we may also see that classic 2-try trap pattern. So strong run up. The pullback is very shallow now. Shallow pullback, higher high. Once I see a strong move, shallow pullback, higher high, I now know to look for a trap. The trap pattern now comes in off the low of usually off the low of a new hidden channel, right? So watch that channel. It's a little trap low off the low of that channel. That's another scenario I'm watching as we go higher here for tomorrow. So if we go higher, I'll adjust that channel up, right? If we go higher, I'll look for that 2-try trap pattern. Now, at this point now, let's put that channel back on. This is a very good fitting. You'll notice very, very well adjusted channel there. I like that channel. It'll make for a great area of support. Now, real quick here. Let's do this. Let's get that off here again. Second scenario. What if it goes sideways here? Now remember, if we go sideways, what you want to do is you want to buy underneath the range with a failure pattern. Wait for price to go lower, wait for sellers to try to sell off the EMA, and buy right into those stop losses. That's the key to a range. Now, what I'm looking for here is I'm looking for, right, prior swings. I'm looking for trend lines. I'm looking for levels of support down underneath that range to combine with that entry setup. Okay, so we start going sideways, don't chase after it, don't sell it, because again, the range magnet is up overhead. I'm looking for seller failure patterns off areas of support underneath that trading range, buying into the stops of those bears. Now, let's put the channel back on finally, right? Now, we don't go sideways, we don't go higher, we pull back. Nice deep pullback, right? Well, not too deep. We'll talk about a deep pullback here in a second. Not too deep, but down into my battle zone, right? My 32 level, my 25 level, right? It's a prior swing high back there. That lines up right around the low of that channel. Now, if I get that pullback off the high, what's going to happen is the moving average now goes above. Okay, the bears will come in, and try to sell that. Again, it'll look a lot like this. Right? They'll get under the moving average, try to sell it. My job is to buy into those stop losses. Okay, so at this point, again, we know we're bullish. Anytime I see bears get in trouble, I always try to tell my clients, anticipate. You know you want to be a buyer, but pretend for a moment you think the market's bearish. Right? Where would you be getting in? Right? You'd be probably getting in on that pullback. Right? Maybe it's a halfway pullback, right? Or a hidden channel, right? Pullback there, whatever it is, right? Anticipate those bears coming in. Think about where their stops are going to be and buy into those stops, right? That's the goal here. What I also want to do though is anticipate now, right? Can I get that stop run with a seller failure into that pullback off the moving average for kind of a double dip, right? A seller failure into a bullish pullback. And then where's my objective? My objective will be to back up and retest that high at that point, right? That's a good looking pattern there if we can get that relatively deep pullback. Now, what if we really get a pullback here, right? What if it really gets whacked? You know, something happens overnight, the market takes off to the downside. Can I sell that now? You got to be careful again because of what? That range magnet. I'll talk about a sell pattern here in a moment, right? But now, with all of that bearishness now, what's the plan here? It's that nested failure, right? Moving average comes over. I'm waiting for the bears to try once. I'm waiting for them to try twice. I always like to grab that support trend line off the low. Bears try once, bears try twice, and bingo, right? We're buying off that key level of support. We call these nested failure patterns because there's two of them, right? Nested, right? One being inside of the other, right? Whatever you want to call it, you get a strong pullback now, you know, almost underneath that channel, right? And the bears come in, they try to hit it a couple times. We draw that rising support and you're good to go there. Don't forget too, if you really get lucky, you'll get that deep pullback and you'll get that crown reversal, right? You'll get that one, you'll get that two. If it's really your lucky day, you'll get that crown reversal. That's the big kahuna when it comes to those deep pullbacks, because that trap low, it just gets everybody's trapped, right? You get the bears trying once, bears trying twice, you got pullback sellers trying, and you've got breakdown sellers trying. It's a beautiful setup, right? It's a nested failure with a trap low. It's called if this was against the trend, it'd be a crown reversal. It's just simply a nested failure with that trap pattern low. But those are some areas I'm watching, some setups I'm watching here, right? If we get a much deeper pullback. And I remind you again, guys, I'm simply drawing on the screen right now to what setups I'm watching for, right? I've got hundreds of examples of these patterns on my favorite markets inside of our free trading course. You'll learn all about them. Grab that link in the upper right-hand corner. And again, don't forget, we'll be trading this stuff together tomorrow. I'll put all the membership information for you guys into the description of that video. All right, so now I think we have a pretty good idea here. Shallow pullback, deep pullback, trading range. Now, again, this is not the place to be looking for a crown reversal top, right? This is not the place to be trying to get that reversal. We're not at a turning point. Magnet is overhead, just not a spot to be trying to sell. However, let's just say, for example, we get the measured move, then we see a strong pullback, right? And we hold it and we jump, right, off that moving average. If they can give us, I don't care how it happens, it could happen here, happen later, but once we get that strong move down, that pull back to the moving average and that jump off the moving average, once we've got that reversal, remember, we see a lot of nice strong pullbacks, but they don't hold it. That's the key. Once they get the hold, then I can mark the low, then I can mark the high, can find that new hidden channel. And at this point now, if the bears can take back control, there's one thing on their mind that is 2,800, right? 2,800, that should ring a bell because that has been a very common area for reversals to snap back to tomorrow. I would not be surprised if we see another very interesting session tomorrow. We rally up, we clam back down, and we finish strong at that 28. Wouldn't surprise me whatsoever. I try not to get committed to any direction. I just know what's the most reliable setups, and I wait for them tomorrow. That's the best plan. Come in every morning, open mind. If we're bullish, find levels of support, find setups to trade. If we're bearish, do the opposite. Right? And don't forget tomorrow, 8 o'clock Eastern time, we'll do it together. All right, Emini is looking good. How am I doing so far? Any questions? Drop those questions down in the comment section below. Make sure you subscribe to this YouTube channel. As you can see, we got the goods here at School of Trade. Let's wrap things up here on the gold tonight. What do we know about gold right now? Well, we know we get a strong bull move up. There's no doubt about that. We are one, right, and really what you could call 2 and 3 legs up, right, into a range. Or we are 1 and then 2, a very big leg up, right, into a range. What looks to me, what this looks like right now is, if you zoom out a little bit, right, we're kind of ticking off all the boxes here on the way up to that major top up around that 1762.3 area. We're sitting at kind of the medium top here right now at that 1745. So it's definitely a level I've been watching in the last few weeks. We've known that level is there, and it looks like the market got their jump up and then started going sideways, right? So I look at this as a bull market into a trading range is what this one looks like, right? It's a bull market here into a range. Now, I can also see too, if I zoom in a bit closer on this here now, right? If I zoom in closer here, there's also a resistance trend line coming down overhead. That resistance trend line is public enemy number 1 for the bears. Right, that trend line overhead will keep the bears awake tonight, right? The bulls awake tonight, right? That is their problem, right? Their problem right now is that falling resistance, right? So bulls, I should say, I may have said bears back there. Bulls do not have a clear line of sight to go back up and retest the high. What you have to remember is these buyers, right? These buyers have this very strong move up, right? They try once and they fail. They try twice. If they fail, this thing could collapse all the way back down again, right? That trend line is right smack in the way here right now. And so that's my biggest concern for being a buyer. Right now, we can get rid of all that problem if the market goes sideways. And so really what I'm honestly hoping for the bulls' sake is we go sideways here on the gold for tomorrow. So we sit sideways here. Hopefully that will get rid of that trend line. Right? If we can get rid of that trend line and go sideways a little bit here, what do you do in a bull market with a range? You look to be a buyer underneath it with a seller failure pattern, but where? Where do you do it? You're going to do it at a level of support, right? Now, where might be a level of support I could trust? How about a trend line support, right? Coming off those lower lows, right? How about a swing support? Right? How about a prior high support, right? So this is where you want to be thinking. And again, if the market goes sideways here, right? So we're bullish into what looks to be a range already. So we already kind of have a good idea where the range is. If we continue to go sideways and kind of blur out this trend line, we look a whole lot better to be a buyer, right? So if we do go sideways, seller failure below that trading range. Now, what if we pull back here? Okay, I've got this trend line, finding that channel. Now, this channel is a little bit foggy, but I think this is the best I think this is what you're going to find the most number of people using here for tomorrow. It might be a little bit higher, right? It could be a little bit higher, but potato, potato, I think this area is the key here. I've got that support trend line there. I get that prior high at 1732. You can see kind of where this whole support area comes in on the chart, right? Now, remember, that trend line is a big problem. Okay, we talked about this on oil. If I get a shallow pullback here, we're bullish, right? If I want to be a buyer, how do I buy without buying directly into that level of resistance? I need a trap pattern. Remember that trap pattern from the oil chart? 1 try for the bears, 2 try for the bears, trap low, and go. Okay, the key to this is we've got to get the bears here to try to call that top. They're going to want to call the top here because of that trend line, right? We're not quite there yet, though, I don't think. Then I've got my trap low to allow me to rope in those counter trend sellers. At the same time, though, I got to make sure I'm getting that trap because I don't want to be trading into that overhead resistance trend line, right? So be aware of that. Now, maybe we get lucky and maybe we get a deeper pullback, right? Maybe we pull all the way back into this deeper buy zone, right? This deeper support level, 1727 and change, a deeper pullback now. If I get that deeper pullback now that trend line isn't so big of a deal anymore, is it? But again, deeper pullback, momentum's a concern. 1 try for the bears, 2 try for the bears. Guess what? Now this is where you've got to kind of play it by ear here. It's all going to depend on how close that trend line is. If I can get a 1-to-1 target, right? If I can buy this and if I can risk small to get that 1-to-1 before I get that trend line, and we'll talk about how to use the ATR indicator to find your stop loss amount. The stop loss determines your target. We'll talk about that stuff tomorrow morning at the opening bell once we know what the volatility looks like tomorrow morning. But as long as I can get that 1-to-1 right there, I can use this as what we call a nested failure, right? So deep pullback, bears try once, bears try twice, and we're going. If it does something like this, though, where it gives a deep pullback, and then it comes up 1, right, and then 2 now I've got to be careful, right? This is not the same pattern, right? That's not the same pattern, is it? You see that? So in that situation, you've really got to wait for that trap low or at least a double bottom down. You know what I mean? You've got to try to avoid that trend line the best you can. I know it's not easy. And a lot of it has to do with where is that trend line once we get there? And again, do I need to use a trap to get in below it? Or can I use a nested failure off a trend line support just because I have enough for that 1-to-1? So that's got potential to be a bit more of a confusing spot here for tomorrow. When in doubt, sit it out, right? When in doubt, sit it out. You always want to wait for the most prime setups that give you a good risk-reward ratio, let you get that 1-to-1 before you reach into that before you run into that resistance level here overhead. All right, so now I think we got that looking pretty good here. Now, what could also happen is the market blast, right? Whatever got the market jumping here today could come right back in here in Asia, and we could easily see a 1, strong move up, 2, a pullback to the moving average, and 3, a breakout higher. Where's my channel? Mark the high, mark the low, find that channel. That's an easy trade if we, again, big question, if we can get that 1, 2, 3 breakout. Now, where's my target at that point? My target is that next leg up, as I mentioned, right? 1762 is that next, that's the big top, right? That's the big boy, right? That's the big top. Okay, so that's where we know those buyers want to go. Now, we could also see a very strong shot higher, a shallow pullback, a higher high, strong shot up, shallow pullback, just barely kisses the moving average, higher high, trap low. What's that pattern called? A 2-try trap pattern. 2-try trap. Don't forget, I always like to incorporate those off additional levels of support. So watch that as we go, right? Make sense? All right, so now we've got some patterns as we go higher. We know what to do if we go sideways. We want to get this darn trend line knocked out, right? That's the key here. It's a big headache for the bulls, right? We know that for a fact. Now, speaking of a headache for the bulls, how can I get short on this? Well, first of all, am I at a major turning point? right? I'm at a turning point. I'm at a high right now, right? I'm also, of course, at a range here. So a crown reversal is an option. Strong move up, shallow pullback. One try for the buyers, right? Two try for the buyers. Trap high off of this high. Again, remember these reversal patterns, right? These crown reversal patterns, they are going to be much lower reliability. When you go with the trend, buying off support, right, in a bull trend, right, with the trend, with momentum, good risk-reward ratio, you'll get much higher winning percentages. These crown reversals, I'm going one contract, right? I would go a half contract if I could. They are a lot lower probability. They should not be the biggest chunk of, and they definitely shouldn't be, right, the highest percentage of your trades, right? These reversal patterns should only be about 10%, right, of your trades, if not fewer. And again, if you're a relatively new trader, stay away from these reversals. Stick to the strong move down, the pullback to the moving average, and the jump off the EMA. If we can get a reversal, now keep in mind though, remember, not every strong pullback is a reversal. Not every strong pullback is a reversal. We see these things pull back and fail all the time. They pull back, they fail, and they rip right back up again. So we can't jump in too early. But if they can hold that pullback and run, I'm going to mark up that low, I'm going to mark up that high, and I'm looking to sell short right off the high of that new hidden channel. That's a much more reliable entry, right? That's an 80% entry there, whereas probably only a 60% entry on the first one. All right, not worth the risk on that first one. Where's my objective if the bears take control? If the bears can take it with a 1, 2, 3 reversal, where are they trying to go? There's a big old magnet back here at 1710, right? 1709. That should be pretty easy if the bears can take control for tomorrow. And because it's a Friday, you never know what's going to happen. Again, it could be pretty slow. It could also be very, very fast, and a little bit less volatility or a little bit less volume on a Friday morning could easily make for some nice, big, juicy moves here for us in our trade room. So now we've got the plan put together. We know the upside. We know the downside. We know the risks of selling short in these bull markets. So keep it right. Keep it simple. Stay disciplined tomorrow. And most important thing, though, is get there early with me tomorrow morning at 8 o'clock Eastern Time. We'll update the charts, go over our rules and our patterns, and we'll kick some butt together. Don't forget, guys, all the membership information. I would love to see you with me tomorrow morning. Grab the trade room link. It's right in the description of this YouTube video, and get registered for tomorrow morning's trade room. You got to be a member. It's easy to get started. You can go right to the website, or again, all the information below the video tonight on the blog. Don't be afraid to call me in the office if you have any questions. As always, live support is an easy way to text in your questions as well. And don't forget, if membership isn't quite right for you right now, at the very least, grab that free course as part of our free trial and learn the strategy. That way, when you get back here next week on our next edition of our newsletter, you'll be prepared to know what the patterns look like, know what the strategy looks like, and you can make the most of our time together. All right, guys, great job this week. It's been such a pleasure to share my knowledge on this newsletter. Don't forget to subscribe to the YouTube channel. Hit that thumbs up button for me, right? Hashtag 1%. Always appreciate you guys and gals being with me tonight. Have a great rest of your evening. Hope I'll see you tomorrow morning at the opening bell. If not, there's no newsletter on Friday nights. I'll be coming back at you tomorrow. Next weekend or next week for a relatively short week. I'll be here, right? I'll be here all week next week here, but a kind of a holiday shortened week next week. And we'll talk more about that, of course, next week on the newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.